Good evening, everyone. Time for another silver update. This is the 4-hour chart of silver provided by netdania.com. You can click on the link below. And I've drawn in the key trend line that we're looking at right now, which points at 34 is going to be the key price we need to get above. We actually ticked barely above it in the after hours, but we're just right on that line. We also have this top resistance point that we hit back in December, and then that was the beginning of a serious downdraft from there. So we're looking at 34 as a real key level that we need to get through to continue this move. Then of course we want to get through this line here, the old high, and that's going to be near 36, and then we're going to be coming into the resistance that has to do with these prices back before we got the September smackdown. So we're still rising. The MACD is in a semi-overbought condition, but it's very inaccurate because the drastic drop that we had here that went all the way to -3 on the MACD in September just threw this so far out of alignment that it's hard to gauge. You can see the highs that we had were nowhere near reaching those highs 1, 2, and 3. So there's still room to go on the upside, but we are approaching an overbought condition. So the big question is, can we get through these prices before we get some sort of correction? The other chart I wanted to look at is one that I followed in my blog, and that is the dollar yen, which had a very dramatic move just recently. And you can see we actually want to pull the chart out farther so that we can see the Fukushima lows, because they were critical to the movement in the yen. If you remember, with the Fukushima disaster, the yen, the value of the dollar versus the yen just completely collapsed, and that was kind of a counterintuitive move, something that I predicted based on the idea that Japan would no longer have the funds to buy up American debt, and therefore would be using that money to rebuild. Now, that actually caused a central bank intervention, a very, very violent move to the upside, as all the central banks in the world came in to support. They said to support the strength of the yen, but of course it was really to support the strength of the dollar. They claimed they were worried about Japanese exports, but in reality it was all about supporting the dollar. So you can see that we're now approaching that very key level where that low that we hit. Now, that low coincided with later a number of central bank interventions. Now, you can see on the chart central bank interventions because these are not normal market moves. You get tremendous spike rallies and then drop back down. So we had an intervention here, we had an intervention here, and my guess is we're probably approaching another intervention as the dollar declines against the yen. So if you remember, we had also the tremendous decline of the dollar against the Swiss franc, and we had a very, very interesting move by the Swiss government to announce a peg to the euro, which effectively devalued the Swiss franc. And so it seems that all the stops are being pulled out to support the US dollar. I don't buy the stories about supporting manufacturing export. Of course, as we've shown before, when you pull up the long-term chart of the yen, when we go way, way back and look at the change in the value of the yen against the US dollar, pretty much it has been a steady decline. We actually want to go all the way out to the monthly on that one, but it's been a very, very steady decline all the way from 300 yen to the dollar down to where we currently are, 76 yen to the dollar. So the dollar has lost 75 to 80% of its value against the yen. And if the argument were true that the strength of one's currency prevents one from exporting, then obviously if that were the case, then the Japanese would no longer be able to export any cars to the United States because their currency has gained fourfold against the dollar. But that's not true, so I think those arguments are bogus. I think the real factor behind the support of the dollar and the intervention in the yen dollar and dollar Swiss franc cross has to do with the U.S. government encouraging central banks to buy dollars to support the currency, because it's my opinion that the United States is actually the weakest economy in the entire world as far as a solvency situation. So I want to jump over to the blog, and I put up a chart, actually a graph, that was provided to me by a couple of the viewers, Will and Dave, and I had asked in the video I did before about junk silver about how much junk silver was out there, because I was very curious. I was recommending junk silver bags, so I received this information, and it's very interesting. It's a breakdown. These are all of the coins that have been minted in the United States and what their silver content is, what the silver value is, and the total ounces in the coins, and of course the total. So if you go down to the bottom, you can see that these totals come in at about 3 billion ounces. That's roughly the amount of all. Now you have to remember that this includes the America the Beautiful series and the Silver Eagles. If you add those two together, you get about 300 million. So 90% of this figure is going to be the junk silver. We're going to have to exclude the Silver Eagle and the America the Beautiful coin. Very interesting that the America the Beautiful coin is really just a tiny fraction. It's mainly a Silver Eagle. So they have now minted roughly 10% in Silver Eagle coins of all of the silver coins that they minted in the previous 200 years of American history. So that's quite interesting that that number is that high. But you can see when you look at some of these individual issues, for example, the Mercury dime stands out. You have 2.6 billion of those Mercury dimes that were minted. And also the Washington quarter, that's a real big one, at 3.75 billion Washington quarters, and that comes to a value, current value, of $22 billion. So that's a lot of quarters. And then of course you have the halves. You have your Walking Lib, which is about 500 million. You have your Franklin, which really wasn't in existence that long, just a few years. And then the Kennedy, of course, was just 1964. That was the 90% silver. So, but they minted a lot of those. So you've got about 1.5 billion coins there. Those are the major standouts of those. The Mercury dime series also, was a tremendous number of those. So when we add these all together, we get about 300 billion ounces, and then of course the spot price up here is in the upper left hand corner. That is 33.5, and at that price, that gives us about $100 billion is the value of all the outstanding U.S. silver, including the America the Beautiful and Silver Eagles. So not really a big number when you think about the type of debt and deficits that we're running up. But I really wanted to delve into that issue of how many there were, because of course one of the investments that silver stackers are making is stacking some of the junk silver bags and things like that. So I came across a couple articles. It's really very sketchy to get the information. The first one that I wanted to read is called After the Melts, and this is back from actually in 1999, but it goes through some anecdotal information. I just want to read to you a section here in the end here. And there apparently was this gentleman named Merton who did a study about the melting that occurred in the 60s, but again, there's been melting going on ever since then. But one thing they point out here in this article is, quote, when silver hit $50 an ounce, I would say that 98% of the silver coins in existence were committed to smelting houses. He confided, if the price had been maintained, most of everything would have been lost. Now, this is from a numismatic perspective, because, of course, when the silver price spiked so high, especially the inflation-adjusted price, that it surpassed many of the numismatic values, and so you had many of your uncirculated coins and just about every issue, whether it was collectors or not, it just went right to the refiners. And he says, fortunately, the refiners had a 2 to 3 month backlog, and as silver dropped in value, they withdrew a lot of coins. Even so, it's scary just thinking about what might have happened. Now, the other article, actually, it's just a forum where they're discussing this, and this one person points out, he says, yes, the best estimates literally show that more than 90% coins have been melted than were ever minted. Of course, that cannot be accurate, but it does show that a very significant number were. For a very, very rough estimate, you might want to use 75% melted. So now these go, I've seen them 50, I've seen them 75, 70, 80, 90, and 98, as high as 98. But I'm going to go with 75%. I think that's probably a good number, probably a good estimate. So if we go back to the junk silver totals, and we assume that roughly 75% of these coins have been melted. Now, some people would say, well, you can't include the silver eagles because who would melt a silver eagle? Actually, in researching this, I found that the silver eagles that are turned into coin stores that are scuffed, or ones that are not protected or damaged in any way, they actually do melt the silver eagles, believe it or not. And I think one of the reasons why is they report that the smelters often pay up to 99.7% of spot, and often they're unable to sell these coins for that much. So a lot of times they end up going to the smelter. And it's interesting, one of the people in the thread that I just covered, he pointed out that this has been going on continuously for 47 years, ever since they started, ever since it became legal to melt them. Now, one viewer pointed out that you have to worry about this being illegal, and that there's a concern about collecting these coins because you're going to be melting U.S. legal tender. Well, it was illegal to melt those coins when those coins were common circulation coins. But as soon as those coins were removed from circulation and they were no longer official government issue, then it became legal to melt them, and that melt started in the mid-60s. So back to these totals. If we just, let's skip the ounces and just go straight to the money here. If we do assume that 75% of these coins have been melted, then we're going to be left with $25 billion. Is going to be, at current silver prices, going to be the outstanding value of all of the silver coins in existence that the U.S. government has ever minted. Only $25 billion. So that kind of backs up my contention that it may actually end up being the case that we run out of junk silver because so much has been melted that there just won't be any left for investors to buy. $25 billion, just to put that in perspective, and I didn't have this up ahead of time, so I'll go ahead and pull this up. If we go to the national debt clock, and if you remember, we had the debt ceiling debate last summer. Now, apparently another debt ceiling the debt ceiling has been raised again, kind of on the QT. So apparently they've bumped it up into the 16 trillion figure. But you can see, if you remember, I reported at the time when the national debt surpassed the gross domestic product, and you can see we're quite a bit above it now. We're a good $140 billion higher in debt than we are in GDP. But if you remember, that debt ceiling debate was around when we were around 15 trillion. We're now at 15,287 billion. So we've added that 287 billion. So if we go back to that figure, if we only have $25 billion left of junk silver, then you can see how extreme those numbers are. Since the last debt ceiling debate, we've added 10 times that amount to the national debt. And just to put that in perspective, if we went back to some type of normal interest rate, which I would say would be 5%. 5% traditionally was actually on the low end of interest rates. But let's say we go back to a 5% interest rate. If we went back to that, then if we look at 1% of this debt, 1% of that is $152 billion. So if we do 5% of that, that's going to be 5 times that. That's going to be $750 billion a year in interest payments. I believe the government is now only collecting about 2.2 trillion. So once we take out that 750 billion, assuming that interest rates go back to normal. Now, if interest rates went to where they should be, which would be somewhere what Greece is paying, let's say they went to 20%, then you would see that the interest on the national debt would be 4 times that 750 billion, so it would actually be $3 trillion. And since the government only takes in 2.2 trillion in tax revenues, then clearly we would be technically bankrupt at that point, because the interest rate, the interest that we pay on our debt, would exceed the entire revenue stream that we have. So it really is just about the maintaining of these artificially low interest rates. The Fed is in a box. They really don't have any choice but to maintain these artificially low interest rates. And of course, the way they maintain those artificially low interest rates is by printing the money to buy their own debt obligations, which obviously that can't go on forever. If it could go on forever, then every government in the world could just simply print up whatever money they needed to, and none of their citizens would have to work. They could just live off the government. So that's obviously an impossible situation, and one that's going to explode. But the main point is, going back to the amount of silver at $25 billion, you can see that's just a pittance, and it's my prediction that at some point, especially when the silver price starts rising and people start really jumping on the bandwagon, my guesses will be when we cross the $50 mark in silver. Eric Sprott has said that he believes that silver will probably cross that this year. There have been a lot of other guesstimates by other folks who've said that they think that silver potentially could even cross $100 this year. But I think when silver starts to really get above this line, when we get across through here, and when we get across through some of these other lines, and we really start moving to the upside on silver, then the public is going to become interested again and start buying silver. And then that's when we're going to see a crisis with much of the silver becoming unavailable. And then we could just see a real moonshot in silver. And we'll talk to you next time.